Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Monday morning pre-market webcast. Okay, daily chart, and what we saw all last week. I'm gonna zoom this in right away. Monday, Tuesday, Wednesday, Thursday, Friday. All 5 days, at one point in time, traded below the daily mid-band. But on all 5 days, the bulls were able to rally and avoid closing below the daily mid-band. The impact of all of that support, once we got to the jobs report and got that unknown out of the way, we were able to break above the 2280 area that had been a problem and really extend up into the area of 2294 in and around the upper Bollinger Band. So here's your hourly chart. We had all these trips down to 63, 64, remember. We had higher low potential. We pushed it up. Our concern going into the jobs report was whether the bulls were going to do another one of these, where they, do it, higher low, push higher, fail. This time they were able to follow through. I mean, it wasn't anything glorious. It was a solid morning that turned into a flat afternoon, but that's all they really needed. But you've got 94 up here, you 93.75 here, then 94 here, 94 quarter here. So the bulls are going to have to figure out 94. The bears are going to have to push back down into the area of the daily pivot today, coming in the 85s, if there's going to be any serious discussion about them testing and potentially breaking the new weekly pivot at 22.8240. I would suspect, though, if we do go straight down to the weekly pivot, that's much more likely to be support on a first test than anything else. What's going to be key is once it bounces off weekly pivot, does it make a lower high? And then on a retest, what does it do? If it makes a higher high, I think we've all seen that movie before. It's going to engage that upper band. We're going to go ahead and threaten the current all-time high at 22.99.5 and most likely print a new one. That's effectively where we are. The bulls have the advantage. They earn the advantage by being able to maintain all of that support through every assault on that 63-64 area all last week. As far as the Bollinger Bandwidth goes, comes in this morning at about 2. That's tight enough to really start to hug a band and grind higher. If that's not meant to be, maybe we get a short-term band ride as we did a few days, I guess that would have been 2 weeks ago, and we fall back into dealing with the mid-band every day. The nice part is you can see the ranges kind of start to expand again. That's going to make it a more trader-friendly market for us. The issue is, can the bulls hold up here? The trouble with doing upper band rides at all-time highs is that every day you've got to wake up in the morning and print another all-time high. Not that easy to do. Not in this environment. It is not 2013. It is not 2014. It's not everybody is a dip buyer and every dip gets bought and we just walk it on up and then we get up and we do it all over again. The tape does not have that kind of feel. The trouble with that is we're at levels where the tape needs to have that kind of feel if it's going to be sustainable. And if it can't sustain it, then we're going to continue to linger back to mid-band support until the bears can find enough going on in the world and enough going on in the tape to make a serious push below the daily mid-band and engage the lower band. So I would not be surprised if the remainder of February played out upper band, middle band, lower band. But we've got to see what the bulls have today and see where we end up. We seem much too close to the new all-time high not to print a brand new all-time high. So it's going to be a pretty important Monday. All right, everybody, have a fantastic day.
Follow us on Twitter at Princeton Trader. Come check out our website, Princetontrader.com, and come take a free trial in our chat room. I'll be back tomorrow morning with another webcast. Trade 'em well, everybody.